So I'm watching it for a while. I'm like, this something doesn't seem right here. And I watch gold come up. Now, again, if you would have told me, Mario, at any point in my career that gold would be 3,050 bucks an ounce, and most people have no idea, zero, because there's no media attention, I'd say there's no way. There's just absolutely no way. I mean, I remember when gold finally broke through 400, it was all over the place, let alone 1,000. But here we are at 3,050 and virtually no attention, and it comes through gold. And I count, one, two, three. And this took, I don't know, 4 or 5 minutes, 44 turns of the boxes before gold came up again. During that time, I also counted how many times Bitcoin or Bitcoin futures were in the same boxes. 1 out of 44 for gold, 9 out of 44 for Bitcoin. Now, do you think that there is a message in that? I do.
Monaco 64, home of alternative economics and contrarian views. Well, today I'm speaking with Andy Schectman again. The last time we spoke was about just over a month ago, Andy. So, first of all, how are you doing and how's your golf game?
I'm doing well. Until yesterday, the golf game was pretty good. I woke up yesterday. I actually had a match, and I never really woke up. I think I slept walk through the entire match. So up until yesterday, it's been fantastic. But that's the game of golf. That's why they call it golf. All the other four-letter words were taken, and yesterday was a prime example of that. It might be the hardest game I've ever played, and I was pretty decent in sports my whole life. Golf is a game that will test you. You never know who shows up to the course until you start playing. So, anyways, I miss playing with you, buddy. I had some of the best time playing in a long time with you and my friends. We played, of course, Trump International and Diet Preserve, two of the nicest courses around. So, next time you come back, my friends are asking about you. They want you to come back and play. So hopefully we get to tee it up again real soon. It should be a regular thing as far as I'm concerned. And more importantly than that, my wife loved you. And as a house guest, that's a tough
Yeah.
that's a tough one to break. If the wife loves you, man, then you're always in. So it was great to see you, and I hope you'll come back again real soon.
Yeah, thank you, Andy. And talking about golf, how it can be frustrating. One day you think you do nothing wrong, and then the next day you can't do anything
I
right.
couldn't break out of it, man. I just could
Things-
not shake out of it yesterday, and it's a
yeah.
weird game that way. Like, all right,
It's
I'm gonna start focusing, and then you do the same shit again. But, anyways, I don't know. I love the game; it's addicting. But yesterday wasn't my best effort as it's been. Like
yeah.
winning the our flight and the member guests recently. I love the game. It's intoxicating. It's maddening. But I'm not telling you anything you don't already know.
It seems like a good analogy, and we can start here to the silver market. The last few years, it's some weeks it looks like silver is breaking out, and then it comes back down. It seems very frustrating, but I think silver, like gold, will eventually reward those who've been stacking, who believe in what silver is, that it's money alongside gold. So maybe with the gold silver ratio, I checked, Andy, is like at 91, and I can't see it going much higher. So if anything, I think silver could be ready to explode higher, even though I'll put a caveat there because we've been saying that for a while. So, what's your take on what's going on with silver, the LBMA, COMEX, PSLV?
Yeah, I mean, look, man, we saw. I know that by the end of February, we saw roughly 128.5 million ounces of silver withdrawal out of the LBMA in the 3 months preceding. And that's roughly 42% of the entire float that they had uh, at the LBMA. And when you're trading, according to David Jensen, who you've had on your show a few times, as much as 2.9 billion ounces of silver per day, 3.5 times annual global mine supply, against a total float of 270 million ounces or so. This is a large problem. When you see the amount of silver that's coming into the COMEX, largely leaving the LBMA, it makes someone wonder what the hell's going on. There's been little or no clarity on why all this metal is coming into the COMEX. I did run across something yesterday, and it's interesting. It was a tweet from Trump on January 7th, 2017. He said, "Silver is the most undervalued asset on the planet. It's been money for all human history, and yet here it sits at 16.50 an ounce. Sad!" Exclamation, exclamation. So President Trump understands it, as he does gold, perhaps being the only other tier one asset in the world. And it's very interesting watching the LBMA being bled dry in real time, switching their delivery from T+1 to T+8 weeks, which all but appears to be a default. Seeing massive short positions on PSLV that I guess many people are surmising, and I agree, it does make sense, that the banks are shorting the price, or the share price, are shorting PSLV, because if the public goes long on PSLV and tries to accumulate it, well, then they're forced to buy the corresponding amount of silver to put into the trust. So by shorting it, it kind of forestalls all of this rapid accumulation by the public and keeps them from having to go into the market and purchase more silver. If that's true, I mean, by all accounts, it seems to be true. It just goes to show the level of desperation that has been reached by the bullion banks. And I don't know. It's an interesting time. At the same point, maybe if we look at it from another angle, maybe they are doing that so they can continue to accumulate cheap physical silver and send it back westward. I don't know. But it's as interesting of a time as I've ever seen in 35 years at the highest level, and virtually no media attention. Now, I did see an article actually by MSN News saying, if you missed the rally in gold, well, check out silver. I agree with what Donald Trump said in 2017. It's the most undervalued asset on the planet. And by the movements of the massive players, whether it be going to desperate tactics like suppressing PSLV so that the trust doesn't have to go and accumulate more silver, large amounts, or the inflows into COMEX, or the outflows out of the LBMA. There are some very, very, very interesting things going on, and I guess we'll see what ultimately happens. But it's far beyond what we are being told. Just Trump tariffs. What do you think?
Yeah, I think that PSLV situation could be the bullion banks trying to stop net buying of by retail from forcing the trust to buy more physical. And to me, I mean, I haven't got the chart here, but you've probably seen it. It's like the short shares in PSLV. It's like a hockey stick.
Right.
It shows desperation. The central banks hold a lot of gold, so they can always try to help out the bullion banks, but with silver, they don't. So yeah, I'm wondering as well. I wanted to ask you because you are involved in the precious metals business on the retail side and high net worth side. Are you seeing shortage? Are you seeing a lot of demand? Because it's this problem in the LBMA seems to have started from big money, like or even sovereign governments. Is it starting to seep through into your market?
Not to the level that one would think. Um, it is to a degree, but not anywhere near where it should be based upon what's happening all around us. Um, this is part and parcel for the reason why so few people are ever truly successful in investing because they follow the herd. And when you look at the media attention that we've seen on gold and silver, I'll give you an analogy why this is the way that it is. So I was working out the other day in the health club, and at the end of my workout, I get on the elliptical machine for about a half hour, and I never watch CNBC ever, but it's right here in front of me, and this was last week, a few days ago, maybe Wednesday or so, and gold's at all-time highs at this point. Oh, $3,050 an ounce or whatnot, and should be all over the place in terms of media coverage. And there's a stream that goes at the bottom of this of the page like this, and that shows individual stocks. And then underneath that are three boxes, and they flip like this every 5 or 6 seconds. And we'll say the indices like the Dow, the Nasdaq, the Nikkei, the S&P, gold, Bitcoin. So I'm watching it for a while. I'm like, this something doesn't seem right here. And I watch gold come up. Now, again, if you would have told me, Mario, at any point in my career that gold would be $3,050 an ounce, and most people will have no idea, zero, because there's no media attention, I'd say there's no way. There's just absolutely no way. I mean, I remember when gold finally broke through 400, it was all over the place, let alone 1,000. But here we are at 3,050 and virtually no attention, and it comes through gold. And I count, one, two, three, and this took, I don't know, 4 or 5 minutes, 44 turns of the boxes before gold came up again. During that time, I also counted how many times Bitcoin or Bitcoin futures were in the same boxes. 1 out of 44 for gold, 9 out of 44 for Bitcoin. Now, do you think that there is a message in that? I do. I'm thinking to myself, gold's at all-time highs. The LBMA is being drained. The United States has become a net importer of gold. Massive, largest deliveries in the history of the COMEX ever. And yet 1 out of 44, 9 out of 44 for Bitcoin. And I think this is the problem, is that there are a lot of well-read people just reading the wrong stuff, being followed by or being following the wrong source of information. And so, to your point, no, I mean, yes, there's greater demand, but nowhere near what it should be. And it's largely in part to the fact that the media, again, and if you think that there's enough power to go in and actually suppress PSLV by the banks, there's probably enough power up at that level to suppress the information from the media, or to use the media as a tool of propaganda, not only to keep people from realizing what gold and silver have been doing and the potential that they offer, but an agenda to push people in a certain direction. At least that's the way I took it.
Andy, could you tell the viewers what specials you've got going on right now, and also tell them what they need to do if they want to get in touch with you?
Yeah, I probably should have had that. Normally we update our special sheet today. Let me just see what they were last week. I apologize.
Yeah, I've got it here, I think last week's on the
Yeah,
screen.
that was what we had. Every time I'm on my show, Mario, someone comes to my door. Yeah, that's what we had last week. And when when you were, knock it off. Mila's saying hi to you. And I don't know that she's ever attacked another person the way she does. You jumped all over you and licking your face nonstop. I think she had a love affair with you. From a standpoint of 1 ounce gold coins, Mario, $59 over spot for a Krugerrand is as cheap as they get. And when you were here, you and I talked about pre-65, both dimes and quarters and half dollars. And to me, from a standpoint of utility, it's as good as they get. And during the pandemic, those were priced higher than just about anything else except American Eagles. So, I mean, you couldn't ask for a better value with greater utility than the pre-65 silver. And of course, the Valcambi kilo bars that for a long time they've been hard to get. Well, we do have them in stock now. They're lovely, about the size of an iPhone. Everything's on sale for the most part, has been for quite some time. especially in light of what we see happening at the highest levels. So, the best way for people to get in touch with us is to, and I've had a lot of your people call lately, and I'm very appreciative of that. And we try to take real good care of them, is to send us an email at info@milesfranklin.com where you will get our price list that we don't publish. And if I get one, I guess, pushback from the public, it's that we don't publish our prices very extensively, only just up to a very small order limit online. And I do that for many reasons. Someday I'll do a show with you or someone else and go through the 20 or so reasons why I don't do it, but it's to the benefit of the client, in my opinion. Send us an email at info@milesfranklin.com. Say Mario sent me. Just ask for the price list or any questions you have on IRAs, anything you've heard on this podcast or any others. And if you want to be contacted, ask to be contacted. Put your phone number down. Check your spam if you don't get a reply right away. Some 1 out of 10 will end up in spam folder coming from a corporate server. But info@milesfranklin.com, and our price list, I guarantee, will be as good or better than anywhere in North America. And we're very honored to have your endorsement, Mario. It means a lot to me, and we take very good care of the people who come from you. Doesn't mean we don't make mistakes, but if we do, we'll make it right. I promise you. But we're very appreciative to work with you and your following, which is very extensive in this country. So to all those people out there who are watching this, yeah, please feel free. Info@milesfranklin. Mario sent me, and we'll send you just the price list with no obligation whatsoever.
Yeah, you mentioned $400 gold, and I remember that. It was around 2004. And I don't know if you've seen this. I've made quite a few videos about this. The editorial by the FT. It says going gold. And beneath it, it says the pointlessness of holding bullion continues to sink in. And at the time, of course, there were no iPhones or apps. I used to buy the paper, but I thought it was such a contrarian indicator that I cut it off the paper and had it laminated at work. And I even wrote here, Andy, it says April 16th, 2004. And the price, guess what it was? $400.65.
Yeah, I
So they,
remember. It was a big deal because I started doing this in '89, and every time it would get near 400, they'd smack it down.
yeah.
And so yeah, it's funny. I miss the newspaper. I used to love reading it every morning and with a cup of coffee. It's funny how things progress and change. Now everything is done on our phones, and information is so immediate. You would think there'd be more journalistic integrity across mainstream media, but there's not.
No.
And that's why I think there are people who have been misdirected. You have massive, I think the largest percentage of the retail public invested in equities, like ever. It's over 50% right now. I mean, it's like the largest ever. And at the same time, you have the Mag 7, the hedge funds having their lowest allocation to the Mag 7 in 2 years, just as the public is jumping in with both feet. Um, the whole thing is upside down to me, and I would just simply tell you, Mario, that I look at what's happening at the highest levels as an indicator of where things are ultimately going, less the public, because the public is always late to catch on, always, and this time will be no different.
You just mentioned there what's going on at the highest level. And we saw, I think it was a couple of weeks ago or last week, Senator Loomis of Wyoming, she presented again this Bitcoin Strategic Reserve Bill, and on the next to last page, it had a whole clause about how to revalue the Treasury's gold from $42.22 to wherever they want to revalue it to. And despite that, we've heard though that Secretary of Treasury Bessent, he's denied they're going to revalue, but he would, of course. So just a couple of questions on this point. Do you think this bill will eventually go through Congress and President Trump will sign it? And if it does, do you think they're really serious about revaluing gold, the statutory price? And what consequences do you think that would have?
I think that they should revalue the price of gold. It's interesting that Bassett is backtracking from his comments. He's gotten a lot of questions on it. No, we're not going to revalue gold is basically what he's saying. But it would certainly make sense, and marking it to market at 3,000 would give the Treasury about 800 billion free and clear. And Senator Loomis is somewhat annoying to me. She started in Tennessee, the meeting in Tennessee, talking about revaluing gold. Now I think she got a lot of crap about publicly saying some of these things. I'm not sure. Now she's even talking about selling the gold to fund a strategic Bitcoin account. You see, but you wouldn't need to sell the gold because when the Treasury, who owns the gold, gives gold certificates to the Fed, and the Fed gives money to the Treasury General account, that those certificates have no claim on the physical gold. It's a stupid accounting gimmick, is what it is. They have a claim on fiat currency in that amount, but people think, well, if the Treasury gives the certificate or gives the gold to the Fed, who gives them certificates which are claim on the gold, and then pays them money for it, that goes right into the Treasury General account. Well, does that mean the Fed owns the gold? No, it doesn't. And it doesn't mean they own a claim on it either. So in essence, they could market to market and then go beyond that. If you take the money supply and you take a 40% gold backing or a 40% of the largest, broadest measure of the US money supply and divide it into the ounces of gold we supposedly hold on behalf of the American people, which again hasn't fully been audited since 53, you come up with just over $12,000 an ounce. As crazy as that sounds, every $4,000 increase would give the Treasury General account from the Fed $1 trillion free and clear. So that would add $3 trillion to the Treasury General account, which they could go do whatever the hell they want with at that point, whether it be buying Bitcoin to pay down the debt or whatever it may be. So they don't even need to sell the gold. And in terms of revaluing it, and by the way, that whole act would take virtually no congressional support at all, or approval. You would just have to have the Treasury Secretary tell the head of the Federal Reserve to revalue the price of gold, and it's done. Um, so should they do it? Yeah. I mean, why else are they bringing back all this gold? It's very difficult to surmise. When you talk to Judy Shelton, as I have, and she said she was told by Trump, she believes that they will issue gold-backed treasuries on July 4th, 2026, the 250th year anniversary. Well, that gives us just over a year to do that. Um, Maybe you have to have gold at a much higher price, but the first thing to do is to onshore it. I don't know. I think that there would be ramifications. We'd probably see much higher inflation as that money is just created out of thin air and then used to do something with into the economy. Um, but maybe a lesser of all evils, a way to inspire confidence in the balance sheet or a country that's working on it. It would benefit all of the central banks. I don't know. It just seems ironic that it's held in an account called the gold revaluation account. You have members of the Bundesbank asking for it, the head of the Dutch National Bank asking for it. When you're as far down the rabbit hole as we are with indebtedness, I think, nothing is off the table. And what I can tell you is I do not believe it has anything to do with Trump tariffs. What I can tell you is it might have maybe a little bit, maybe has a little bit to do with the Basel III reclassification, the tier one status that goes into effect July 1st. Maybe it has a little to do with the arbitrage, all of that stuff a little bit, but I just have a feeling it is much deeper. And maybe they will revalue gold. I think Trump and his team understand the significance of it. And certainly having it on the balance sheet at 42.22 an ounce is not doing anyone any good. And, it has been revalued three times that I can think of. Once right there, Roosevelt did it in 33. The second time when Nixon closed the gold window in 71 at $35 an ounce, he then revalued it the next year to 38. I think a 7% increase. And then he did it again in 73 to 42.22. So in terms of over a 10% increase or devaluation of the dollar and increase in the price of gold. So could it be done? Yeah, why not? Will it be done? Not sure, but I can tell you it would certainly benefit the central banks. It would benefit the United States. It would benefit the Treasury General account. So maybe Cynthia Loomis is onto something, and maybe Bassett and Cynthia both got a little bit of slack because they're trying to bring all this gold home and do it under maybe the guise of Trump tariffs or whatever it may be. And maybe Trump said to them, "Hey, you guys, shut up." They're starting to catch on in London. Now they've gone from T+1 to T+8 weeks, and they say it's because of a shortage of trucks and manpower. Maybe let's just keep it a little bit more on the down low. And then once all the gold and silver have been siphoned over, we can tell them what our true motivation is. Again, speculation, but I think it's something that certainly they do notice. And when an obscure senator in Wyoming starts talking about it, it's probably noticed at much higher levels in the Trump administration.
Yeah, I mean, I've looked, you spoke about the few times they revalued gold, 1934 from $20.67 to 35, and then in 72 to 38, and then a year later to 42.20. And back in the 70s, of course, gold started being traded, was free floating, not like in the 30s, but those revaluations basically put a floor on gold, and it went on to trade to almost $900 a few years later. So I think it would be very bullish and inflationary, but I think they need the inflation because there's so much debt in the system that unless you inflate, the whole thing implodes. And I wanted to ask you about Max Kaiser because you mentioned Bitcoin. I saw a lot of people, even like Michael Saylor, saying, "Oh, we can sell all our gold to buy Bitcoin." But like you said, he doesn't understand how it works because the Treasury doesn't need to sell any gold. It just revalues it and sends new certificates to the Fed, and the Fed pays the difference from 42.22 to whatever price they revalue to, and sends the Federal Reserve cash to the Treasury, and they can take that cash and buy whatever they want. Baseball cards, Bitcoins, whatever, Trump coins. So yeah, Max Kaiser, I remember over 10 years ago, before Bitcoin became important, he was really into sound money. He used to do a program with James Turk. He was very pro silver. I remember him doing a campaign of buying silver and, you know, short, collapsing JP Morgan, buy silver, stop JP Morgan. He knew what goes on with the bullion bank. So what's he said recently, Andy, about Bitcoin or cryptocurrencies and gold?
Yeah, it's kind of crazy. He said, I'll read it. It's a very short tweet. He says a stable coin. So first of all, there's been a lot of talk about stable coins. Stable coins, USDT, USDC, the new one issued by Ripple Labs. These are stable coins, dollar-backed stable coins that when you're inside the ecosystem of cryptocurrency and you want to move from A to B or A to C or A to D or wherever you want, B to D, wherever you want to move, and maybe there's some time in between and you don't want to go back into US dollars, you go into a stable coin, a US backed a stable coin that is tracking the US dollar one to one. And these stable coins are almost entirely backed by US treasuries and then, of course, some dollars. So it's interesting that being in the crypto sphere actually is supporting the legacy system, the treasury market. It's giving tremendous demand for new treasury issuance. And there's been a lot of talk about stable coins supporting the dollar and again, or the treasury market. Just seems a little too contrived to me. But anyways, Max is talking about the stable coins and he says, a stablecoin backed by gold would outcompete a US dollar backed stablecoin on world markets. Russia, China, Iran should take note. It would track inflation. The US dollar does not. You're guaranteed to lose purchasing power. The US dollar has no volatility, but again, you're guaranteed to lose purchasing power. Bitcoin is deflationary but volatile. Gold tracks inflation and is minimally volatile. Why wouldn't Russia, China, Saudis, Iran do this? But they are kind of doing this to a degree. And maybe he's a little late to the party there. They have been doing this for quite some time. And that's the whole concept of the unit settlement currency, 40% gold backed. And again, going back to that 40% number, you remember the United States did 40%. I think they changed the law in the mid 50s from 100% to 40%. The Swiss used 40%. And now we see the unit token backed in theory. They said they've agreed to it in theory, 40%. So we're going to start to see the concept of gold backing, whether it be settlement currencies, stable currencies, stable tokens, or whatever you want to call them, stable coins, and or just using gold to settle trade imbalances. That's the thing that makes me come back to the first question. I know it was more on silver, but on gold too. What do I make of what's going on? When you see the United States become a net importer of gold and silver for the first time that I can ever remember, copious amounts flowing into the United States, the fact that you have to do something to reignite confidence, because confidence in this system, net, Mario, since 2014, net, the United States has not seen central banks buy one U.S. Treasury. Yes, they have been buying them, but at the same time, more selling than buying, much of it being replaced with gold. And so how do you get that confidence back into the system? You peg them to gold and make them deliverable in gold. The only question that I have regarding even that is, why would anyone want to buy a 50-year treasury backed by gold when they can just go buy gold? And, maybe the only reason is that they would have greater fungibility with, immediately in the system, but maybe not. Anyways, bottom line is, I think what he is basically saying is what you and I have been talking about for a few years now with what's going on with the BRICS. That is what they're doing. Maybe not in the form of a stable coin, but it's reintroducing gold and the legitimacy that it brings to the system, the veracity that it brings. And I've been saying for 4 years that ultimately I think you will see a marriage between gold and this distributed ledger technology, blockchain technology, to provide veracity. And that is exactly what Dilma Rousseff, the former president of Brazil and the head of the New Development Bank, said they have agreed upon in principle a 40% gold backing to the new settlement currency called the unit that would be deliverable to governments upon demand. So it's interesting to see Max Kaiser do a pivot from being a Bitcoin maximist to actually, espousing talking about the virtues of gold and what it would do to the new system.
Yeah, I mean, he knows about the virtues of gold. I remember meeting him, I think, in 2009 at a gold conference, FT Gold Conference in London. So he was all into gold and silver. But that aside, Andy, all this gold and silver that's flowing to the US, if it had been like a hedge fund or a big investor, I think they'd be in trouble by now from the regulatory authorities like the Treasury, CFTC, whoever. And that's why I think it could be the US government doing it. It might not be for revaluation purposes, Andy. The other thing that it could be for is if the United States wants to sit at a table with Russia and the BRICS to have a new Bretton Woods-like realignment. And Besant mentioned that in an interview he did in early November prior to the elections. He said, I think we're very close to a Bretton Woods-like realignment. You need to have the gold to have credibility and sit down with other people. And I think a lot of countries like Russia and China, they know, like we do, about Fort Knox and other U.S. depositories, that all that gold has been leased out many times over. So it could be because of that as well.
Real quick, while we're on
Yeah.
the subject, don't mean to interrupt you, that you mentioned King Kong on X, and when you were staying at my house, I had an interview with him that day. I think he's fantastic. I know he's been on your show a couple times, and he's a very interesting dude. I was reading some of his posts, and he agreed. Someone said something, and I'm going to read it to you. And he said, "Yeah, you've just nailed it on the head. That's exactly what I believe too." And the statement was, "It seems the whole point of Bitcoin was to provide liquidity for U.S. Treasuries and quell domestic demand for gold, while preparations were being made for a gold-backed U.S. Treasury note, including, most importantly, repatriation of all U.S. leased and rehypothecated gold." So, interesting. I'm not saying that's really the case, but I find it interesting that that thought. Anyways, you have certainly with Bitcoin steered a lot of the sentiment away from gold into Bitcoin. And again, going back to what CNBC had on those boxes while I was working out, yeah, I mean, gold, people see it, but nowhere near the way that they see and are being enticed in that dopamine rush of, ever increasing profits into Bitcoin. So I guess only time will tell how this all plays out. But Mario, I mean, there are things going on in this industry that lend themselves to speculation. I guess only time is going to tell what the ultimate motivations are, but they're much deeper than just reshoring gold because of the tariff threat.
Andy, that was great. I really enjoyed speaking with you. Hopefully, we'll see each other again soon. I'll have to look into that. And yeah, we'll keep in touch. And I wish you a great week. And I hope your I'm sure your golf game will come back. So,
No, I'm sure it will too, and I'm not going to play now for another 3 weeks. So sometimes that's the best recipe. You play too much and you need to take a break. So I do hope to see you in Europe over the next few weeks while I'm there, and it would be delightful. Dinner's on me, my man. So if you can make it work, let's do it. In the meantime, thanks for having me on. I look forward to picking up where we left off, and I wish you a good week as well, buddy.
thank you.